Hello, everyone. My name is Zak Gardezy, and welcome to Money Minutes. I'm the founder of Wealthstone Private Wealth Management and a certified financial planner. So, here on Money Minutes, I like to cover the latest market headlines and provide my outlook for what's ahead. And so, on today's episode, we're going to be diving into a big earnings week with Microsoft, Meta, and Apple all set to report. And really, if that's not enough, the Federal Reserve is holding its Federal Open Market Committee meeting, and that concludes tomorrow on Wednesday. I'll discuss the latest economic data and what I expect Chairman Powell to say when he addresses the country. So let's get right into it. So first up, Microsoft, Meta, and Apple are all reporting earnings this week. And as I've mentioned in past episodes, earnings season is when publicly traded companies release their latest financial performance and expectations for the rest of the year. This period is crucial as it provides the market with new information such as product launches, mergers, regulatory issues, and more. So, given the market's heavy weighting towards tech, this week is particularly significant. The combined market cap of Meta, Microsoft, and Apple is over $7 trillion, which is larger than the GDP of South America and Africa combined. And, as we saw with Alphabet last week, the market is not just rewarding companies for stellar financial results. It's all about forward guidance at this point. The commentary from company executives on revenue growth and potential benefits from all this AI spending is crucial. For instance, we saw with ON Semiconductor yesterday, they beat on earnings per share and revenue, and their executives provided an optimistic outlook, which caused their stock to rise. Conversely, if we look at, Meta CEO Mark Zuckerberg, when last quarter he shared that immediate revenue and financial benefits from their AI investments might not materialize soon. This led to their stock having a significant drop, really one of the worst days ever for Meta. So, Apple and Microsoft, we're going to want to hear about their recently unveiled, new AI focused products. Apple introduced Apple Intelligence, which is their, product-wide generative AI. And it's also accompanied by a new lineup of iPads, and we think we'll hear about iPhones and Macs and these new devices with significantly more powerful processors. And there's a lot of excitement there because especially since a lot of consumers, there really hasn't been a huge compelling reason to upgrade your devices. And with this new technology, that could change. And so we've seen with Microsoft, on the other hand, they've launched Copilot PCs, which are equipped with neural processing units or NPUs, and these are designed to handle large amounts of information quickly. These PCs can process, according to Microsoft, up to 40 trillion operations per second, making them ideal for AI applications. And the tech sector's, massive investments in AI are really being closely watched by the market because, we're eager to see if these investments are going to translate into revenue. For Microsoft, Meta, and Apple, the market will expect stellar numbers, but also some positive guidance. And we'll be listening intently for remarks from their executives on the potential from all of this recent spending, and I'll be paying very close attention to it all. Now let's shift to the economy and the Fed. So in June, the inflation data really indicated that there was deflation. That's when prices start to go down, which potentially can trigger a spiraling effect in the economy, and not in a good way. The Fed has discussed cutting interest rates, when the economy cools sufficiently and inflation approaches normal levels. Recently, we've heard from central banks, like for example, the European Central Bank, which actually started cutting rates before they hit their inflation targets to avoid, any more catastrophic risks. And so it's expected that the Fed will keep interest rates steady on Wednesday, but all eyes will be on Chairman Powell's speech. I'll be looking, for any hints about future rate cuts and the Fed's confidence in potentially easing monetary policy soon. And if the FOMC members aren't in unison, I do expect Chairman Powell to discuss the risk of delaying rate cuts, which that could spook the markets. And so to wrap things up, while the financials of some mega cap tech companies, have been strong, the market's really at this point putting a lot of weight on forward guidance. And so this week is crucial for market momentum, especially for artificial intelligence, and the Federal Reserve's actions will also be closely watched. Now, I do remain optimistic about the future of AI and the tech sector as a whole. The significant spending that we're seeing by these companies I believe will likely pay off, but we're going to have a bumpy ride along the way. And so considering, also the developments we've had over the last few weeks with the US presidential election, it's really no wonder why the markets have been so choppy. And as always, if you have any questions or would like to discuss your portfolio or overall financial plan, please don't hesitate to reach out. Thank you so much for tuning in, and I hope to see you all again next week.